Hi, it's Eric Snaell from Vanilla Equity here again. It's time for another portfolio simulation update. It's week 13 and we're getting really close to the year end. And as you know, at the year end is Q4 is over, then we check how much we can actually profit on the performances of that quarter. So we have the three portfolios. We have the buy and hold, which has been performing a little bit better than the S&P. It's minus 1% at the moment. We got the let the profits run portfolio, where we every week we buy more of the ones going up, the stocks, and the ones going down we sell. And actually this week there's no holdings anymore. It's only cash because last week everything went down. Then we have the buy the dip portfolio, and that one is actually performing the best. At the moment it's up 3.6%. The let the profits run is down 7.4%. So the only one where we're going to see a payday is probably the buy the dip portfolio, but we still got a week to go, or I think it's 2 weeks to go. So let's see, maybe as Santarelli comes in, and when the quarter is over, it's going to be nice to see them do the calculations. And for those of you that have already joined Vanilla Equity, you know that if you join during a quarter, you're actually participating in the next quarter. So for you that want to join now in December, that's going to be calculated to the Q1. So you just add weeks to Q1, and let's see how it goes. These are, as I said before, this is just simulation. These are not real holdings. It's just to give you a picture of what it could look like, even if you're really passively managing the portfolios. So I expect people to do much better than these passive holdings. But what you can do, of course, is to sort of split your portfolio in different strategies. So you can, for instance, decide that, okay, when you have 50,000, you can do like we did. We invest that money on a weekly basis, so you don't invest everything at once. And then, for instance, you could keep 1/3 as a buy and hold position, stocks that you think that will go up that quarter. You don't do anything with those, and then you actively manage the other half. You can also split this up. So if you have any friends that you want to do this with, you split the responsibility up, and then you split the profit. And that's a really neat way of doing the diversification. But that's up to you how you want to do it. We have a lot of restrictions in Vanilla Equity. You can only buy the Vanilla Equity, so really the big stocks. If you want to gamble on penny stocks, that's up to you, but that's not what we do at Vanilla Equity. Here we play it sort of safe, boring, but we try to focus on making money. And I believe really that when you have this discipline and you have all these restrictions, that's actually going to help you perform. So it's just like you take a rock star and they make nice music in their living room, and they just have one guitar, one little drum machine, and then you take them to a nice big studio. They got all the instruments and they can't perform anything. They can't do anything. It's just paralyzed. And I think that's a big problem for a lot of up and coming traders, that when you start, you have a platform where you can do anything and everything, and then you start dabbling into everything and nothing really works. So hopefully Vanilla Equity can help you focus. You just do your thing, but on a very limited limited universe, and you know that you have to just perform on a quarterly basis. And that's a huge difference if you compare the service to, for instance, for prop trading firms, where they expect you to make a lot of percentages in 1 week, in 2 weeks, and they pay you every second week. They really put pressure on. You got to perform all the time, and I think that then tends to push the trader to do stupid things because you're so much under pressure. So by doing this on a quarterly basis, I mean, you don't have to trade at all if you want, but I think if you just do a couple of adjustments during that quarter, you can make really good profits and you don't need to stress that much. So if you're not yet familiar with vanilla equity, just head on over to vanillaequity.com, and of course you can always send in questions as well. I'm Eric Snaell, and I'll see you in the next video again.